Good morning, ladies and gentlemen. Welcome to today's webinar, Real-Time Daily Trading Ideas. 5 days, 5 traders. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions just like every day. Right, before we can start with the actual webinar, we will briefly have to present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. If you are unexperienced with our products or trading in general, please do get used to the trading environment by using a risk-free demo account. Alright, this is the schedule for the week. Today it's Paul's turn. And yes, many of you probably know the reasoning as to why they're trading with us, but just as a quick reminder, we do have best index and forex offerings with spreads of just 0.8 and 0.6 pips respectively. Alright, enough for me. I'm passing over the screen to you, Paul. See if you're ready. Good morning, Paul.
Good morning, everybody. I hope you can all hear me. I hope you can all see my screens, ladies and gentlemen. Lovely to be here for this our real-time daily trading ideas session for Tuesday, 28th of May. Well, it's been a rather eventful week since I last spoke to you last Tuesday. There's plenty for us to talk about, and I appreciate that. As I'm based here in the UK, and we've had a rather, let's say, eventful week politically and financially in the UK. That's what I'll focus on mostly today, but I'll come to that in a moment. As always, just I always try and just make sure that you're aware of the sort of the big news that's coming up this week. Some of my colleagues here do absolutely fantastic analysis during their sessions on the actual impact of the particular news. I just wanted to particularly make you aware of it. So this morning we had Swiss GDP, which basically beat expectations quite well. We might have a little look at that later on if we have time. And this afternoon we've got US consumer confidence, so be aware of that having an impact on markets around about 3 o'clock UK time. Tomorrow we've got news coming out of New Zealand. We've also got Mr. Kuroda speaking, sort of governor of the Bank of Japan. That's going to tie into something I'm going to talk about in a few moments time. We've got some German employment numbers tomorrow morning, and also tomorrow afternoon we've got at about 3 o'clock UK time, we've got the Canadian interest rate decision, although there is no change expected at present. Thursday we've got US GDP numbers, and undoubtedly everyone will have a very keen focus on that and how it plays out. We've got Chinese manufacturing PMIs. I always like to take a PMI as one of my kind of favorite pieces of news to keep an eye on, because it's actually very easy for me to understand and sort of analyze. We've also got German CPI and Canadian GDP on Friday. So as I said, there's quite a few bits of news coming out, and as I said, some of my colleagues do some fantastic analysis of the individual pieces of data. It's just for me to make you aware of it. Okay, those are risky times around those news pieces. So for some people there'll be a threat, for others an opportunity, but it's important that you're aware of it. But as I said, here we are in the UK. It's just only been one bit of news here in the last week. I'm just going to try and bring up a couple of slides just to sort of bring up my help me sort of explain it all to you. I'm hoping that you can now see my slide. Hope you can see my still hear my voice. So we had they say in the UK that a week is a long time in politics, and that's absolutely true. When I spoke to you last Tuesday morning, we talked about how Mrs. May that Tuesday afternoon was supposed to be making a speech where she was making a bit of a bold offer to people to get her withdrawal agreement bill to bring it back to Parliament for its second reading, which would be its 4th attempt, and also an ability to sort of try and get it across the line, to get it passed. If like me, you watched that speech on Tuesday afternoon, well, she pretty much it was pretty much her last roll of the dice, and didn't really work out very well for her. And by Wednesday afternoon, as I'd been alerted, she'd pretty much been sort of forced to resign. Her own party had finally got fed up of her. She was forced to resign. Then here in the UK, we had on Thursday, we voted in the European elections on Thursday, although we didn't get the results till Sunday night, which we'll come on to in a moment. But we had the European elections, the actual elections on the Thursday, and on Friday, Mrs. May resigned herself, or gave her date for resignation, which will be Friday, the 7th of June. I think she's sticking about because we have Mr. Trump visiting in the next week or two. There's also some state celebrations that she's supposed to attend to. So I think she'll basically just be sort of being the face for that. And then on the 7th of June, she will effectively stand down as Prime Minister. But she will remain as interim Prime Minister until the Conservative Party pick their new Prime Minister. We're going to come on to that in a moment. You know, the thing is, you know, her legacy is going to be a rather poor one. You know, I don't think history books will shine brightly upon her. She failed to beat Jeremy Corbyn, who would be deemed to be the weakest Labour leader in recent times. She failed to beat him in general election. She failed 3 times to get her own agreement bill through Parliament. In the local election, she lost 1,300 councillors for her party. And the European Parliament election results, as we'll look on in the next slide, you know, she oversaw perhaps what they're saying is the worst Conservative performance in nearly 200 years. That has helped effectively sort of destroy the Conservative Party. She effectively brought back Nigel Farage and the Liberal Democrats from the dead. She breathed life into both of those carcasses. So, you know, her legacy is going to be a rather poor one. But it might be said that you know, she was always, as we say in the UK, she was always trying to bat on a rather sticky wicket. She was always going to be struggling. But of course, you know, with her now sort of standing down, of course, then, you know, the attention turns towards who will replace her. We're going to look at that at the moment because, of course, that will have an impact upon sterling. But, you know, what to sort of add more misery upon her. Sort of Sunday night, Monday morning, we had here the results for the European parliamentary elections, which we held on Thursday. And really, it was a rather dire night for not only for the Conservatives, but actually also for the Labour Party, the sort of 2 main, let's say, centrist parties that you know, have been the bedrock of UK politics for, you know, 100 years or so. They actually were both pretty much decimated, and what we saw was that, you know, the vote swung very, very strongly towards the Brexit party, Mr. Farage's new party. But we also saw an uptick in the votes for the Greens and the Liberal Democrat parties. So you know, what we saw is that in many ways the country is still very strongly divided on those pro and anti-Brexit. You can see there on the right the slide in terms of, you know, the Brexit party won 28 of its seats, which makes it the joint biggest party in the European Parliament, along with Mrs. Merkel's CDU. However long the Brexit party actually stay in those European parliaments will, of course, depend upon the UK's attitude towards Brexit. At the moment, the UK is now due to leave on the 31st of October. And I think what we'll see for the Conservative Party is that invariably those results on a Sunday night, Monday morning were rather chastening, shall we say, for both Conservatives and Labour. It must be said. They're both rather chastening in that, you know, with Mrs. May's, let's say, woeful leadership in terms of the Brexit, and also Labour's complete ambiguity about what type of party they are. They were both actually sort of hammered at those polls. And what we've seen is that clarity is key. The Liberal Democrats and the Greens have both been very anti-Brexit. Not unsurprisingly, the Brexit Party is very pro-Brexit. And what we've seen is that, as you know, those parties that offered clarity, they were the ones that did the best in those elections. And so, of course, that has a knock-on impact into who actually might possibly replace Theresa May, and actually what impact will that have upon sterling and both the euro. So far, we've had quite a few names either openly declaring or, let's say, tickling the soft underbelly of declaring. And I've kind of divided this into 2 groups at the moment. On the right there, on the right group, we have Mr. Hunt, the Foreign Secretary, Mr. Gove, Miss Leadsom, who did resign on Wednesday night, but I'm including her in this group. We've got Sandy Javid, Rory Stewart, and Matthew Hancock. The reason I put them on the right side is because they've all put themselves forward, but personally, and this I might add is a personal view, just watching the news and watching the markets, they were all members of Mrs. May's cabinet, and I think that they are now probably tainted by her failure. And having seen the strong swings towards both the Brexit Party and the Liberal Democrats, I think that anybody sort of tainted by Mrs. May's very, very woeful agreement bill will undoubtedly sort of be kind of pushed to the side. And so I think we will see them. I think we will see those six on the side campaign strongly. But personally, I think that the results from Sunday night will ensure that somebody who isn't tainted by being part of Mrs. May's cabinet will actually probably be the one who comes out on top. And there, so far, we're looking at Mr. Johnson, Mr. Raab, Esther McVeigh, and Steve Baker, who said he would make a decision at this weekend. I think what we might see, what we might see is that, Mr. Johnson, Mr. Raab will probably be front runners. They both, although Mrs. May's cabinet, they both resigned on principle from Mrs. May's cabinet over her agreement. So they are seen within the party as not being tainted by her. Furthermore, with Mr. Farage's victories on Sunday night, what they're going to be looking for, I think, the Tory party is someone who has an element of charisma, someone who is a big name, someone who can actually go into battle against Mr. Farage. That kind of sort of narrows it down to Mr. Johnson, and it's kind of another further personal and further view that how poorly Mrs. May did as a leader, that actually people are even considering Mr. Johnson. They're sort of, normally he would have been a little bit of a dead duck, but he once again has come back from the dead, because invariably everybody thought, well, Mrs. May's so bad, can Mr. Johnson be any worse? We will find out, I think. So I think that will automatically all have play out over the next few weeks. And not surprisingly, ladies and gentlemen, as traders, that's going to have a knock-on impact to sterling. So why don't we have a little look at that and see what opportunities it presents us. So let's just check that you can all still see my screen, see my voice. Here we go. Here's the Admiral Markets Supreme Edition MetaTrader 4 here. I have my profile up for sterling. Okay, so if you want to know how to set that up, go and have a look at the Mastering the 4 M's of Trading webinar series where we covered that. But we have it here, okay, and this is my sterling profile. So I have pound against dollar here, euro against sterling, pound against Canadian dollar, pound against the Aussie dollar, pound against the Japanese yen, pound against the Swiss franc, pound against the Kiwi dollar, and also the FTSE 100 stock index there. So you don't have to be an experienced trader to see that invariably what we've been looking at over pretty much the whole month of May is effectively sterling has been sold off pretty strongly. You can see it there yourselves. I think what we saw was that actually at the start of the year, speculators, major even banks, okay, major players in sterling thought, do you know what, we will have a deal of some sort or another, and invariably that will be strong for sterling. But what we saw over this month, as pretty much from the start of the month, was that Mrs. May's literally, she was literally on her last legs. She was literally sort of, lacked any kind of political credibility, lacked any kind of authority, and invariably the vultures were circling. And with that, we realized that A, Mrs. May's deal wasn't going to go through, and B, that actually after the success of the Brexit Party, also the fact that Mr. Johnson and Mr. Raab are determined Brexiteers, well, that actually we may move towards leaving on 31st of October with no deal. And that invariably has spooked speculators in sterling, and that has just added to that pretty much that big sterling sell-off that we've seen over the last month. And if, like me, you've been overall a long-term seller of sterling, well, then it's been a fantastic trade. But what we're seeing now is we're here at as kind of what I would term as an inflection point. Here, if I just look at pound against US dollar for us, we can see that we dropped from that. We bid 132, now down to around about 126.60, and we're looking at just around holding about here. Now, What we talked about for some of my clients yesterday was that, you know, we had a nice flag pattern setting up, and then we had a nice key reverse, which gave us a little bit of a trade back down to this area yesterday at the start of the week as those results and elections came in. And now we have to really see, can we break that 20, call it like the 2650 area? That's what I'm particularly looking at. Can we actually see us break beneath 2650 and hold beneath it? In which case then, you know, I start to see us on pound against dollar starting to move back down towards around about the kind of 125 area. That's what I'd be looking at us for our next move towards, okay? Can we get beneath 126.50 and hold, in which case then we're going to drift our way down. Same with Euro Sterling, one of our old favorites. We can see that, you know, you can see it was just a beautiful move from 85, okay? We touched this area where we'd had strong support in the past, and you can see it's just been one-way traffic. That's the daily chart there, one-way traffic, back up towards around about 89. My own personal view on this is that, you know, we're here at a kind of a bit of an inflection point, middle of that range between about 85 and 90, 91. And, you know, we're looking at here, if I look at the 4-hour chart, and looking at that, you know, we've had a little bit of a triple top. We also looked as if we had a bit of a false breakout, and realistically what I need to see is, you know, I need to see us get above about that 88.40, 88.45 level, hold above that, okay, in which case then, you know, I'm looking for continued euro strength and sterling weakness, and then you'd be looking for, it wouldn't surprise me if we drifted back up towards around about that 89.50 area. That's what I'd be looking at if we can break that particular level. As I think the politicians start to come back to work, because of course we had a bank holiday yesterday here in the UK, and they start to sit down and analyse Mrs May's resignation, also the European parliamentary elections, and as we start to sort of see the jostling, shall we say, as the Tory party leadership candidates start to jostle for position, that in itself will, I think, have a bit of a spook on markets, and it wouldn't surprise me if we saw in the short term a little bit of a continued sterling sell-off. And as I say, on the euro side, moving back up to around about that 89.50 area. If we can break this, 88.40 area, that's what we'd be looking at. So expect more volatility in sterling. Keep an eye on it. We can see the Japanese yen there. Okay, it already took off this morning. We were looking at trades there for this morning. That's just an indication of sterling weakness and Japanese yen strength. And we touched upon that at the moment. So I'm just going to very, very quickly take a quick look at that, because what we've seen is Japanese yen strength continue, and it's continued, you know, pretty well, pretty nicely, you know, from what we spoke about last week. If you remember, if you joined us, what we talked about was we had lots of Japanese yen strength, but we were taking a little breather last week, and we touched upon how we talked about how, you know, here we had in dollar yen, euro yen, Swiss yen, and CAD yen. You know, we were having the sort of, you know, we had a little bit of a rally, a little bit of what looked like very scruffy flag patterns, okay? Flag pattern being a continuation pattern. So we were waiting for a continuation of the move to the downside, a continuation of yen strength. And what we saw here on dollar yen, price rallied up, put in a very nice sort of inside bar there off the 20-period moving average. Euro yen did exactly the same. It rallied up, put in an inside bar before it dropped away. The CAD yen put in a nice 3-bar reversal pattern there. And Swiss yen has kind of drifted, but not as drifted down as strong as the others. That's because we've seen Swiss strength come in as well. You know, we're having risk-off mentality when both Swiss and Japanese yen are strong. There we can see we had flag patterns that also finished with nice setups. If you want to know more about that, check those Mastering the 4 M's of Trading webinars in the archive. But we're definitely, as you can say, we're continuing to see yen strength, and that's what's playing out there. With that, we're starting to see a little bit of the dollar weakness, and I'm going to show you that now, and with a trade idea or two. We've already had one of our trades trigger and fly this morning. I'll overrun just a little bit. I appreciate we're had a lot to cover today, lots to go through. There's been lots happening, and undoubtedly there'll be lots continuing. If we just very, very quickly look at the dollar index, yes, it's grinding north. Okay, it is grinding north. And last week we did push to sort of highs for the year, and actually for the last couple of years. But if I go down to the daily chart, okay, what I started to get interested in was we had here back on the 23rd, we pushed to a new high, but actually we rolled over and closed beneath the low of the previous day's candle. That's it's an engulfing candle. It's a key reversal candle. Some of you would say it's a bearish rejection candle, and we've had a drift away down from there. So perhaps we're seeing a little bit of dollar profit taking, and I'd be keeping an eye on that to see, could we drift our way back down towards that 50-period moving average, and if so, how would it react there at around about the 97 level? I'm just keeping an eye on that. And what actually sort of helps me confirm with that is when I look at the euro dollar chart. If we look at the euro dollar, we talked a couple of weeks ago about how we were in a very, very nice downtrend. Price had given us a nice 3-bar reversal there off the 50-period moving average, ran down towards our target. Okay, we talked around about the area, around about that kind of 1130 area. And then once again, just in the reverse of the dollar index, which should be no surprise, we had a nice key day reversal there, okay, on the euro dollar. We can see there, pushed to those kind of lows, but then actually closed just above the high of the previous day's candle. Gives us a nice key reversal, also gives us a bit of a double bottom there at a significant level of support. So if we look at for those of you who might be aggressive counter trend traders, what I'd be looking at is to see, could we get a little bit of a reaction off there? And so I'd be looking to be long at about 111.47 with my stops down around about 111.02. So that gives me about 45 pips of trade risk, and I'd be targeting back up towards around about the 113 area. So I'd be risking 45 pips for about possibly 150, 153 pips of profit. That's just a smidge over 3R on a trade. It's a bit of an aggressive counter trend trade, but we can see and wait and see how that plays out as over the next couple of days. If I look at dollar Swiss, all that's doing is just confirming me that we're getting a little bit of Swiss strength and a little bit of dollar weakness here. All that's doing is confirming the euro dollar trade I want to be looking to taking. We're getting a bit of a, as I said, dollar weakness, bit of Swiss strength, Swiss risk off along with the yen. Dollar just a bit of profit taking there. I'll just finish off by having a little look at the DAX. It's a very popular trading instrument for here at Admiral Markets. Look at the weekly chart. We spoke about how we'd had a really nice rally up, fell back in and gave us a bit of a bullish on a longer term, bit of a bullish rejection candle. We're looking to see could we move our way north. But actually on an intraday basis, on a shorter term basis, what I'm starting to be interested in is here's the daily chart, and personally I see that at the moment as the DAX is beginning to coil up a little bit there. I'm looking at how we're actually sort of seeing that prices just coiling up there. I'm just drawing in very quick scruffy trend lines. I see prices just coiling up. I look at the way the 20-period moving average is acting as dynamic resistance and starting to turn down, and the 50-period moving average is acting as dynamic support, and we're coiling up, getting tighter and tighter, and we're expecting to see what might actually happen. I'll just show you what my trade was from this morning. First thing, straight out of the gate, the early bird catches the worm. What we were looking at this morning here as a trade is that price right back up to this 12,100 level, which has been a pretty significant level. Put it in a key reversal where it also topped out yesterday, and then we were short there. Okay, so I shorted that this morning at around about 12,107. My stops around about 12,122, just above. So the risk 15 ticks, and my target was 12,053, which we hit nicely. But as you can actually see, it actually went another good distance beyond my target. But there you go, that's trading for it. So I know we've got a question on gold, so I'll just do gold to finish us off, ladies and gentlemen. Weekly chart, as always, we've talked about how it's been sort of drifting its way down after having hit that sort of supply block. We were looking about how it just drifting its way down. Okay, it's forming lower highs. All right, okay, lower highs on the weekly chart there. Okay, the 1300 level has acted as a pretty significant level, and where we are at the moment on the daily chart is once again we just seem to be kind of caught a little bit between around about, talked about it last week, around about sort of 1270 area and between that 1300 area. Okay, now at the moment I see us in a bit of a block there. So if you're a range trader, that might be something that is of interest or use to you at the moment. Okay, just to keep an eye on how price reacts at those levels. Every time it gets beneath 1280 over the last couple of months, it's not been able to hold down there. It's actually been bounced up a little bit, and every time sort of 1300 hits, it has a reaction. And as I said, we're getting lower highs continuously there as well. Maybe it's a sort of a descending triangle that's building up, but I think for it to do that, we would still need to bounce up to around about that 1295 area. So there you go. Hope that was interesting and useful to you. It's been fantastic as always speaking to you, ladies and gentlemen. I hope you've found it useful and enjoyable. If we've got time for a last question or two, I'll happily take one. Otherwise, I wish you the best of success in your own trading, ladies and gentlemen.
Maybe you can say something about the Dow Jones, Paul?
Yeah, of course.
Perfect.
Absolutely. Happy to. So let's have a quick look up at what we're seeing here. Weekly chart, all right. We talked about this a couple of weeks ago about how price reacted to the early high in 2018. It's almost like a head and shoulders pattern there, isn't it, that we've seen on the weekly chart. We rolled over and dropped down to the 50. Went down to the daily chart and showed how the 200 period moving average has acted as significant. Okay, and we dropped back down towards it last week again. If I go down to the 4 hourly chart, okay, let me just zoom out. I look at us here, we talked about we were in a little bit of a block last week. We broke beneath it, and now I see that, we're beneath the 50 period moving average there. We've had a sell-off this morning, okay? Remember that's the sort of electronic contract. It's not the market hasn't opened, but I think that's just been effectively an indication of what we've seen there in terms of, what we saw in the DAX this morning as well. Personally, what I've been looking at here, on a shorter term basis, what I'd need to see for myself is we've had a real sell-off there this morning. I'd want to see, could we sort of drift our way back up towards around that where the 20 period moving average is, around about that sort of 25,650 area, just in time for the market opening this afternoon. And if we form ourselves a kind of a lower high there with rejection candles, then I'd probably be looking to be on the sort of, my bias would be for the short side to work that. Then of course, remember we've got 3 o'clock US consumer consumption numbers coming out this afternoon, so wouldn't be surprised if I say if we drift back up towards that, and then the news gives us a bump in the direction based upon the news and how it comes out this afternoon. There you go. I hope that helps you all, and as always, I wish you the best of success in your own trading, ladies and gentlemen.
Thank you very much, Paul. Thanks for the comprehensive analysis. Guys, for everyone who attended yesterday's webinar, I'm going to repeat myself. For everyone who did not, this is going to be new information. The real-time daily series is going to come to an end. We will be starting with a new format in summer or after summer, but you will be informed pretty soon about what is going to happen. Exactly. This is going to be the last week of real-time daily trading ideas. All right, guys. Thank you very much. Have a good day ahead and a good week. Bye-bye. Bye, Paul.